everyone and welcome to Buy Now, Sell Now weekend right here on ET Now. It's been an eventful week for the equity markets. In fact, we had the wrapping up of the March series as well as the culmination of the start of the new financial year. Well, lots in store today on the show. We'll be discussing our viewer queries on Gujarat Pipavav as well as Coal India. Also lined up on the show, Vinod's portfolio. That's something that we'll be discussing. Well, time to get on board our experts. Joining in on the fundamentals, Vikas, Sethi, Managing Director, Sethi Finmart joins in. We also have on the technicals to guide us through Rakesh Bansal, VP RK Global. Welcome to the show, gentlemen. Let's start off with our first viewer query for the day. Well, Harsh Bhatia has sent in this query and he's a regular viewer of BNSN Weekend. Thanks very much, Harsh, for sending in your query. He's a software engineer from Mumbai. Got two questions. Let's hear him out first on Gujarat Pipavav. Harsh, what's your question?
I bought 35 shares at a price of 181 rupees for the time horizon of 2 to 3 years. I want to ask whether should we hold, sell or acquire more.
Okay, so let's get straight to it and delve into the details about Gujarat Pipavav because he is looking to hold this stock for a fairly long-term time horizon. Now, in terms of the numbers, it did report a fairly weak Q3. The volumes also fell about 18% to 3.3 million tons. But despite that, the stock has not been doing too badly. In fact, in the news as well, just very recently on the tariff hike of about 5%, that was a bit of a saving grace. They managed to rationalize their costs as well to a large extent. And most of the analysts believe that the company is on track when it comes to earnings. They're likely to maintain a 61% operating margin till about FY20. They're talking about the possibility of negative free cash flows as well in the midterm. So Vikas, let's understand from you what your outlook would be. And do you think that this is a stock to hold on to, a good name to have in the portfolio at the current levels?
Actually, you've discussed most of the detailed fundamentals of the company. The company is pretty good and recently, they had also undertaken an expansion of their container handling capacity, which would lead to some margin expansion also. So I like the stock. The stock has corrected from its recent highs. But if you are willing to give a 2-3 years time horizon to the company, then I'm expecting a good growth from this company, keeping in view that our economy is expected to do well, and with global trade also picking up, I think things should be good for this company. So I would recommend a hold on the stock at the current levels and ask the investors to be with the stock for a period of 2 to 3 years.
Okay, so stay put. That's the word coming in on the fundamentals. Hold on to the stock at the current levels. But let's just map out the stock in the long term. How has Gujarat Pipavav fared over the last 3 months as well as over the last 6 months? What has been the outlook when it comes to the kind of chart patterns, and how has the stock moved to these levels of about 172? And as I said, despite an okay performance, the stock has been performing fairly well. 17% higher in the last 3 months. A 6-month chart also should be flagged off for you. Not quite the same momentum, but 6% down. So let's just understand, Rakesh, from a technical standpoint, would the fundamentals mirror the technicals? Do you think that this is a keep?
Well, Avan, this is definitely a keep. Not only a keep, this is a clear buy at current levels. I don't see stock going down below 160. 160 seems a very good support for Gujarat Pipavav port. And I feel like stock is likely to demonstrate a rally to 195 to 200 levels in next 2 to 3 months. It's a clear buy at current levels.
Okay, not only is this a good candidate to hold in your portfolio, Rakesh talks about 160 being a strong support level, but this is a buy candidate. So Harsh, I hope we were able to help you out. Do take note of all of those levels that have been mentioned by our experts. Next up, Harsh has got a query on a stock that's been in the news of late, and that's Coal India. Let's hear it out, Harsh.
My next question is about Coal India. I have 10 shares of it at a price of 374. I want to ask with a time frame of 3 years, I want to ask should we sell, hold or acquire more?
Okay, that's the question coming in on Coal India. So let's analyze what exactly should be the prospects for the slightly longer term. Just to tell you a little bit about what brokerages have been saying. Morgan Stanley recently assumed coverage on the stock with an underweight. And in fact, they expect the consensus estimate downgrades. They're talking about a target of about 245, saying that the dividend cut and the D rating is likely to impact costs going forward. Morgan Stanley also says that limited pricing as well as higher costs could be a dampener when it comes to the overall earnings going forward. And the high capex puts the high dividend yield as well at risk. In the news recently with the e-auction, where it would be offering power plants that began on the 30th of March, the recent project of Coal India as well got the green nod or approval in Jharkhand. Vikas, let's chat fundamentals. Few concerns being flagged off when it comes to earnings as well as capex viability by brokerages. Are you worried? Do you think Harsh should stay invested? Is it a good stock to hold?
Yes, Avan, my opinion would be different. I feel one should hold on to Coal India. From a long-term point of view, the stock looks pretty good. And that too, more so after the recent fall which the stock has seen. It's come down substantially from its recent highs. And with the kind of focus which the government has on improving the power sector, and for that the availability of coal or the supply of coal has to be done properly. So the government is also taking a lot of steps to improve the efficiency of Coal India. So keeping all that in mind and keeping the valuations in mind, at the current levels the stock trades at pretty attractive valuations. I'm bullish on the stock from the current levels, and I would recommend a hold on the stock. And I think in say about 1.5 years time we could see levels of 400 rupees on the stock.
Okay. Of the view that from a fundamental standpoint, this is a good stock to have in the portfolio. Despite some of the concerns that have been flagged off by brokerages, Vikas Sethi maintains a thumbs up. But let's talk about what exactly is the view when it comes to the chart patterns. And this week, the stock may have had it rough, but even in the long term, jagged edges, it's been under a little bit of pressure. Rakesh, do you think that this stock, from a technical standpoint, is likely to hold on to the current levels? Are you seeing any sort of breakdowns on the charts?
Well, Aman, the stock is in a corrective mode. Yes, today only we have seen a big breakdown. Stock is likely to correct, and I think on the downside, 260, 265 is a good support. Purchase price is around 374. I feel one should clearly hold. At the same time, one should try to average on decline around 260 to 265 zone on decline. If one gets this price, then I think one should average and hold for, like, let's say 1.5 to 2 years. As Vikas also said, like, we might see a level of 400 in next 2 years plus time frame. We might see a level of 400. It's a clear hold, and one should average on declines.
Okay. Thumbs up coming in on the technical side as well. It's a clear hold, and you can look to average on declines. That's the word that Rakesh has for you. And thanks very much, Harsh, for sending in your query. Do keep them coming in. We'll take a quick break right here on the show. But up ahead, we've got Vinod's portfolio. That's what we'll be discussing on the show. And of course, we encourage all of our viewers as well to participate. So you can simply send in all of your queries and get them answered, as well as record your live video queries on the show. All you have to do is email us on bnsn@etnow.tv. You can also send in an SMS to 58888 or call in on 022-2483-7111. We will take up your queries and help you get them answered. You can visit our Facebook page, facebook.com/etnow. Great to have you back with us. This is Buy Now, Sell Now Weekend, taking it straight to our Portfolio Advisor segment. And today we'll be discussing Vinod's portfolio, walk you through his profile. He's 35 years old, he lives in Bangalore, and he's employed. Got a 2-year time horizon on his overall portfolio, so can describe that as fairly short term. Let's walk you through the stocks that he has, and it's a bunch of mid caps as well as large caps. First, we've got Care Ratings. He's bought that at 1,400 rupees, close to 100 shares. Bayer Crop at 3750. TCS from large caps, 50 shares at 2,700 bucks. Moving right on then, from IT, there's Polaris as well, close to 300 shares at 175 rupees. KRBL, 500 shares, purchased at 170 bucks. And there's Oberoi Realty, 280 is the buy point. Moving right on then, L&T is in the portfolio, 1375 is where he's bought close to 100 shares. There's Siemens, close to 100 shares, picked up at 1250. And Stride Charson features on the list, 1025 is where he's picked up close to 25 shares. Moving right on then, there's HDFC Bank, marquee name in his portfolio, 50 shares of that at 1,015. 200 shares of an Inox Wind bought at 285 rupees. And finally, Biocon, 510 is the buy price, 100 shares is the quantity. Vikas, Let's analyze his portfolio in greater detail. Chat about the first three stocks. Care Ratings, he's also got a Bayer Crop Sciences and TCS. How comfortable are you with the mid-caps?
Yes, Avan, I was taking a close look at his portfolio, and on the face, or when you look at deeply, you find out that his exposure to agri stocks is much more than what it should be. So, and agri stocks are dependent on the vagaries of monsoon also. So, I would recommend sell or reduce on Bayer Crop where he has got exposure, and then there is one other stock from the agri name in the portfolio. So I would recommend a reduce on Bayer Crop, and I would recommend buying an Ultratech from the amount which he realizes on the sale of say 50% of the quantity of Bayer Crop. And the second stock, Care Ratings, that stock also, the company is good, but I feel if one were to stay with the stock for say 2 to 3 years or say 1 or 2 years, then I think relatively this would underperform. There are pretty other ideas which would do better than Bayer Crop Care Ratings, and so in that category I would recommend a switch to Atul Auto, which is a pretty fast growing company. And the third stock was TCS, which I like, and I would recommend a hold on the stock, and he could continue to hold on to TCS from a long term point of view, and I think from here also the stock would generate around 20% in a year's time.
Okay, that's the advice coming in on what you should be doing with some of the mid caps. Moving right on then, let's talk a little bit about Polaris in the portfolio. That's another IT stock. He's making money on this investment. Do you think it's good to go for more? KRBL, what's the advice here? And Oberoi Realty, are you happy with the fundamentals here?
So as far as Polaris is concerned, since I'm talking about the investor's portfolio in particular, since he already owns a TCS, and that too a sizable percentage of his portfolio, I would recommend a sell on Polaris. He's making some profits, so I would recommend booking profits, and then say if he were to stay in mid-cap IT segment, then I would prefer Persistent Systems or a Mindtree at the current levels. So if he wants to be with mid-cap IT, then he could switch to Persistent System or a Mindtree. Then the other stock would be which was there in his portfolio was KRBL. But as I told earlier, that he already has an exposure to agri stocks in the form of Bayer Crop Science. So I would recommend a sell on KRBL. He's making profits on it, and I would recommend a switch to a mid-cap cement company, which I feel the sector itself is going to do well in the next year, or say next year or couple of years. So I have a buy on JK Lakshmi Cement at the current level, so I would recommend a switch to JK Lakshmi Cement. And the third stock was Oberoi Realty. Although the company is good, but the real estate sector is not doing well, so I think this stock would relatively underperform. So my recommendation would be to sell, and if he wants to play the realty sector or any boom in the realty sector, I think the better way would be to go through a housing finance company, which I'm pretty bullish on. Actually, the sector looks pretty good. So in that sector, I'm bullish on Divan Housing, which is a low priced or a low valued stock from the sector, or else he could look for an LIC Housing Finance, say leading company in the sector. So my advice would be a sell on Oberoi Realty and switch to either a DHFL or an LIC Housing Finance.
Okay, that's the advice coming in. So clearly quite a few switches and recommendations that Vikas has advised on that entire set of stocks. There are more quality mid-cap stocks that you can look to put your money in. Meantime, L&T, we're talking about a turnaround in the capital goods sector. Does L&T at 1375, merit a good bet in one's portfolio? What's the outlook on Siemens? And oh my God, it's been such a rough ride for the pharma stocks. What's the outlook on Strides Shasun?
Avan, as far as L&T is concerned, the stock is beaten down, but I think if one were to hold on to L&T for the next, say, couple of years, the stock would certainly do well from the current levels. So I have a hold on L&T. And as far as Siemens is concerned, although the stock is good, but since he already has an exposure to capital goods sector through L&T, I would recommend a sell on Siemens. And then my idea would be to advise him to have some auto stock in his portfolio. He does not own any auto stock in his portfolio. So I would recommend a Motors, sell on Siemens, and with the money which he gets, he can switch to Tata Motors. And the third stock was Strides Alkalib. Although pharma stocks are not doing well at this time because of the regulatory restrictions which are coming on and off. But I feel if one were to have a long-term point of view, then pharma looks good and Strides would be a good company to bet on. So I would recommend a hold on Strides Alkalib.
Okay, that's the call coming in. So clearly, comfort being seen in L&T and Strides Shasun. Tata Motors, though, getting some auto into the portfolio. Let's move right on. And HDFC Bank, I reckon that would be a stock to hold in the portfolio. But what's the outlook when it comes to Inox Wind and Biocon?
So as far as HDFC Bank is concerned, this is the leading bank. The stock would continue to offer steady and consistent returns over the long term. So I would recommend a hold on HDFC Bank. And as far as Inox Wind is concerned, I would recommend a sell on the stock and a switch to private sector bank only, because I feel he should be having more exposure to private sector banking space. So in that space, I like an Axis Bank or an ICICI Bank at the current levels. So he could buy into an ICICI Bank or an Axis Bank. And the final stock which he has is Biocon. It's a pretty good company. Recently, it has got some approvals also. The stock is doing well. And at the current levels, it looks good. And I think he should hold on to it. And say in the long term, I think he would see substantial upside in Biocon too.
Okay, that's the advice coming in on the entire portfolio. Vikas has made quite a few chops and changes and recommendations, so I hope that you took note of them. Let's take a quick break right here on the show, but of course want to tell our viewers that this is only a model portfolio. You must consult your individual investment advisor before taking any investment decisions. And of course want to remind all of our viewers that you can send in your portfolio queries as well as your individual stock queries to us. Here are the coordinates, do take them down. Simply shoot us an email on bnsn@etnow.tv. Send in an SMS to 58888. Call us on 022-2483-7111 or visit our Facebook page. Welcome back. Still tuned into Buy Now Sell Now Weekend. Let's chat markets then. And Rakesh, get in a view as to what the rest of the month is going to look like. We got off, the first day of the new series on a fairly somber note. Is 7,700 also going to prove to be challenging?
Well, Avan, you see, market has taken a big breakout on big charts above 7,700 levels, and on the downside, 7,650 to 7,700 is a strong support. And I feel like technically we don't have any resistance from here on till 1,700 to 1,750 levels. And I expect we are going to see a good rally next month also, and we might see a level of 7,900 plus on Nifty. And if you see if you compare Nifty with Bank Nifty, then Bank Nifty is having a better chart as compared to Nifty, and we might see a level of 16,900 plus on Bank Nifty. Market is clearly a buy on decline market, and one should buy at current levels.
What's the outlook when it comes to the banking sector? That's going to be in focus in light of the coming RBI policy.
Well, Avan, if you see Bank Nifty has made a good support, good base at around 15,500 to 15,600 levels, and we are going to see a good rally. I expect post credit policy, we might see a rally to 16,900 plus levels on Bank Nifty. And if you see this time we are seeing strength across PSU banks also, private bank is also participating, as well as the PSU banks are participating, and I feel Bank Nifty might outperform Nifty in next 10 to 15 days.
Okay, that's a call coming in on the banking sector. But let's talk individual stocks. Some wealth creation ideas. First up, Vikas, what looks good to you?
Yes, Avan, my first idea would be a Diwan Housing Finance, which I talked about when I was discussing the portfolio of the investor. This is a leading housing finance company with a focus on relatively smaller towns and cities where competition is less and where the demand is also good because of the ticket size being small. This company has been growing very rapidly over the past 3-4 years. It has shown tremendous growth, and I think this growth is likely to continue, keeping in view the focus which the government has on housing through its various initiatives like Housing for All by 2020, then smart cities. And I think in India we are expecting a rise in disposable income in rural towns and cities, and that would be a pretty big positive for this company. And as far as the financials are concerned, the company has a very healthy balance sheet and the valuations are very attractive. If you compare it with bigger peers, the stock trades at pretty attractive levels. It trades at just about 1.1 times its book value of FY16, and if you look at its price earnings multiple, it is quoting at around just 7 times its FY16 expected EPS of around 27 rupees, which is quite attractive. And recently the promoters have also subscribed to warrants of the company at the price of 235 rupees per warrant, which also boosts confidence in the stock. So all in all, I like the stock. The stock has already seen some run up, but I think it's a long way to go, and my target in a year's time would be 300 rupees on the stock.
Okay, that's the call coming in and on DHFL. But what's the second idea then?
My second idea would be an Atul Auto. This company also I talked about when I was discussing the portfolio. This is also an excellent company with pretty strong fundamentals. This company is into the manufacture of three-wheelers. It caters to both domestic as well as export markets. The company has recently started a plant in Ahmedabad, which would lead to an expansion in capacity and then improvement in the margins. It has also launched a petrol variant of its product, which would be helpful in increasing its exports. So all in all, a pretty good company, and as far as the financials are concerned, the company enjoys a pretty healthy balance sheet with low debt and high return ratios. So I'm bullish on the stock. The stock currently trades at about 520 rupees. It has corrected from its highs, but I think in a year's time we could see levels of 700 rupees on the stock.
Okay, Atul Auto is another stock to watch out for as a wealth creation idea. Rakesh, let's get your top technical picks going.
Well, Aman, my first call is a buy call on Indian Hotel. The beauty of this trade is that Indian Hotel has made a good base at 95 levels, and I don't see Indian Hotels going down below 95. This is the right price to, at current market price, one can buy Indian Hotels. And I feel in next week we might see a level of like 110 on upside. My second call is a buy call on ITC. Technically, it appears stock is on a re-rating. Worst is over for ITC. Firstly, ITC has made a base at around 315 levels, and today that base has shifted upwards toward 324, 325 levels at current market price or 2-3 rupees correction. One can buy ITC with a stop loss at 324.50 paisa for a target price of 355.
Okay, that's the call coming in on some top technical calls as well to watch out for. On that note, gentlemen, it's been lovely having you with us on the show. Thanks so much for joining in and sharing with us your ideas and helping out our viewers. And with that, we're completely timed out right here on the show. Thanks for watching. Catch you same time next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.